Good morning, traders. Welcome to the weekly preview. I am Dan Hodgman sitting down with Mark Meadows. Mark, how's your weekend?
Good. I went to a omakase restaurant here in Chicago.
What is omakase?
It's a Japanese-style restaurant, 8 seats, and one sushi chef, and he just feeds you until he wants to stop. So,
oh, interesting. I lived in Japan. I never heard the word omakase.
It's probably a hipster thing. What about you?
Just another weekend at the lake.
Yeah.
The sun was shining, out on the boat a lot, and had some fish fry on Friday night.
Life is rough for Dan Hodgman.
Right, life is rough. So I can't complain. But on the plus side, today I think I'm kind of excited to talk about this topic or this idea.
Yeah.
You know, really often we're talking about getting through the combine, and in that trading combine you have goals and you have targets and you kind of have a pipeline of how things are going to go.
Yeah.
Once you get to that funded account, that stuff kind of disappears a little bit. We get really excited just as a trader. Even over here, we're excited for you guys that are making it to that funded account.
Yeah.
One of the big things is recognizing now that you've made it, you've put a lot of time and effort and tears and money, and it's taken a lot of work to get there. The last thing I ever want to see happen to a funded trader is them, I don't know, fear sets in or anxiety or excitement kind of forces them to possibly lose that funded account or put themselves in a tough spot right away.
Yeah, and we actually see it more frequently than we would want to, where, you know, either the first day is a huge up, or the first day is, you know, nearing that daily loss limit. And I think what everyone here would try and encourage you to do is to have neither.
Right.
You don't want your first day in a funded account to be $1,000 gainer, because, you know, I mean, you do, but that's going to totally shift your mentality moving forward.
Right. We always, like, one of the most common terms I think we use a lot of times when we talk about risk management is just managing expectations. If you come out the gate and you do have that big day, first off, awesome, huge, and congratulations. But when you come in the next day, those expectations need to be managed. We got to manage those expectations in the sense that if $1,000 in the first day was awesome, great, you did it. The next day, it's coming in and keeping things slow. Don't think you're going to have another $1,000 day.
Yeah. So I want to, before we get into that, I want to just jump into a couple cool things that I think we have in the funded account that a lot of people may not know about.
All right.
So everyone knows about our rules in the trading combine, right? If you're in a $50,000 trading combine, you have a $1,000 daily loss limit, etc. That translates into the funded account. But what they may not know is we let you set that daily loss limit at whatever you want inside of that $1,000.
Right.
So, you know, if you come in and, you know, between earning a funded account and getting one, it's probably around 7 business days to set you up in a brokerage account. During that time, we have you fill out some paperwork and we ask you that question. Hey, what do you want your daily loss limit to be? And if you hit that level, obviously inside of that $1,000 mark, we'll auto liquidate you, but it's not a broken rule. So I can say, hey, you know, because that's what I like to think is like a sober period, right?
Right.
I'm not in the markets. I'm not trading in my funded account. I haven't gotten my login credentials yet. I can think clearly about what I want to do, how long it's going to take me, where I'm going to do it, etc. And really set that, because I think, you know, talk to anyone and you'd say, you know, trading futures starting out $500, $600 is a lot of money to lose in one day.
Right.
Why risk that extra $400 and get close to the breaking a rule?
Right, I couldn't agree more. I actually used to call every funded trader before they entered in that funded account, kind of went through some of those processes with them. I know Mick does reach out to a lot of traders, and if they have questions in their process of setting up, you know, obviously calling in and talking to someone here. But one thing I used to always say, first question I would ask is, what's your personal loss limit going to be? Your account is going to have that one, and we don't want to see you hit that. We don't want to see you lose that account right away. And I always recommend cutting that thing in half to get started, because those first couple days, there's the market's going, if you are moving into that live account, you're going to experience a different flow of the market. You're now officially in that queue. You're not trading on a sim side where it's creating a simulated style fill. You're in a queue, you're in an order, you may or may not. Some platforms fill quicker, some may be a little bit slower. So your feel for getting a fill is going to be different. There's the anxiety, or excitement. You made it.
It's usually one or the other, right? You're either too scared to enter a trade, or you're overconfident and, hey, I got my login credentials at 5:01 on Sunday night.
Let's go. But there's anxiety, excitement, kind of a combination of both, and decision-making processes slow down. So one thing I always recommended was those first couple days, it's just get the feel for getting in and out of that market again. You may have missed a few days of trading. You kind of, it's the same thing when we come back from a vacation. I say it all the time, I like to take time off. You guys know that. I always come back that first couple days really, really slow, put one on, get back out of it. Maybe put another one on and get back out of it. Keep it really, really tight. Just get comfortable, because remember, like I mentioned in the beginning, you had targets and goals and you knew your pipeline. Once you get to that funded account, that's where the real work starts. You know, you did the process of getting to that funded account. Now it's time to really focus on growing and creating long-term consistency. The only way to really do that is to start slow. That first week, if you can come out and trade 5 days, and if you're just in the green, if you made $100 that week, that is $100 in the green. That's awesome. You're moving towards the ultimate goal of creating this long-term, consistent, fruitful opportunity that's put in front of you.
And one of the things so you talk about just, getting in, getting out, kind of when you're early. If I were advising someone, I would tell them, hey, place your order a couple ticks away from the market. Don't on your first week, try not to go buy at market, sell at market. You get that added benefit of being like, oh, I got a discount, especially if you're trading a fast moving market, something like the NASDAQ or whatever. The odds that you're going to miss the very low of the move or whatever is highly unlikely. You'll probably be filled, a point away, a point and a half away if it's trading there. Too. So try and get that extra little juice, and that'll be, hey, that pays for my commissions, or hey, that offers a little margin of safety. I know I'm excited. I know I want to get into this market. Let me just trim it back a little bit by moving my entry point.
And then the next thing to kind of go with that idea is, remember this, so many people get so used to that standard every other Friday I get paid, or 1st and 15th of the month I'm getting paid, and so I'm getting used to this consistent payout. Trading is not like that. There are going to be times when you can't pull money out of your account on the second Friday. So you have to keep that in mind. This is not a standard job where you're going to get paid regularly. You're going to have those high times where you're able to pull some good money out of the market, utilize that, make that last, and then you're going to have the drawdowns where it's inevitable. We're all going to have drawdowns in trading. It's 100% guaranteed, and you need to be thinking about, okay, how do I set myself up to control those drawdowns? So that personal loss limit, growing that account slowly. Keep in mind, usually, think about how long it took you to get through the trading combine, and keep those factors in mind. If you're trading in that 50K combine, how long did it really take you to get to that $3,000 in step 2? Based on those same rules. If you had a reset in there, keep that factor in mind. What caused you to have that reset? Keep that stuff in front of you so you're always thinking about it.
Yeah, and then the last thing I would say is, there's a dedicated funded account trader chat room with our risk manager in there. Please, these resources are created to help traders be successful. We put a lot of time and energy and effort into them, so please use them. Be in that funded account. trader chat room.
Never
ask-
hesitate to call the risk manager.
ask
Mick has
Mick.
a long
Yeah.
history of market knowledge and understanding how to read charting. He'd be happy to sit on the phone and work through some of this stuff with you.
And honestly, if you say, "Hey Mick, I'm feeling a little anxious, or I'm feeling like a little excited, like I want to get into this market," he's really good at feeling you out and being that coach, and either slapping you on the wrist with a ruler or saying, "Hey, well, let's talk about this a little more," right? Like, he's really good at thinking about, hey, what does this trader need as motivation? He's played sports, he knows it,
Right.
and I think
And he
he's-
understands
he's-
money management.
and he's really
like one of
good
the
at
best.
it, and he's not going to scold you unless you deserve it. So,
But also, don't get defensive if he gives you a call. Remember, he's there to help you out. That's
Yeah.
what matters to him. Is he wants to see you
100%.
do well. So if you do get the phone call from him and he says, "What the heck are you doing?" Understand he's coming from the right place, and there's a reason
Yeah.
why he's saying, "What the heck are you doing?" You got to think about that stuff. He's coming in with that neutral, unbiased viewpoint of how can I help this trader do well
but
over
also
time.
the viewpoint of watching. I mean, last year we had 1,020 different funded accounts started. He watched a lot of traders, some of which did really, really well, and some of which lost their account in a week. And so he's able to help. He's a great resource that's able to help you figure out, hey, am I going to be this guy who's going to be like Charles B in a funded account 3 years from now? Or am I going to be like, Dan H who lost his account in a week?
Right. Those are just a few things you got to be thinking about when you get to the funded account. I think it's so important to recognize once you get through the combine, everything starts back over. That is step one. That is day one. Go it slow. Take your time to work yourself through those things. Remember, these markets have a mind of their own.
Yeah.
We're not going to be able to stop them.
You have all the time in the world to make $1 million.
Absolutely. Absolutely.
Cool.
And awesome.
That's all I got.
That's what I got. Everybody, thanks for tuning in. As always, question, comments, feedback, let us know what you're thinking. And if you're working your way towards the funded account, same thing, slow and steady, treat it as though it's the funded account, and over time you'll get through that and make it to the funded account. If you're just beginning or you are seeing some good success in that funded account, remember what got you there. Remember what you've been doing to get to that point, and don't change that strategy just because you have 1 or 2 bad days.
Sounds great.
Awesome. Well, everybody, trade well, and we'll see you in the markets.